What's Today is June 5th. It is Wednesday, and it is, in fact, your midweek review. I hope you have had a insightful week in the markets so far, coming up until Wednesday. Going into tomorrow, we do have unemployment claims being released at 8:30 a.m. tomorrow on Thursday, and then obviously on Friday we have non-farm employment change, as well as average hourly earnings and employment rate being released all at the same time at 8:30. So obviously NFP being released on Wednesday. Tomorrow, obviously expecting a low probability day, as it is a day before a high news event. So just keep that in the back of your mind. Although we do have 8:30 unemployment claims, expect tomorrow to be kind of a lower range day, especially as today was a larger range. I will go ahead and jump into the dollar, make it quick and easy. Whenever you are ready, Henry, I will share my screen. Okay,
All good.
tell me when I'm good. Okay, so on a weekly, still expecting sell side on dollar, right? Acting as we've been talking about sell side, right? Sell side at 103,880, with the idea that this BISI has been used as inversion as we have closed below it and then rejected it as resistance going lower. So my main focus is the sell side in and around 103,880, as well as the equilibrium from this low all the way to this high, the equilibrium, as well as the leftover BISI here. So those are the three main areas in which I'm kind of looking at dollar to go lower. And then as I go in on a daily, same thing, right? We had displacement here, kind of ranged here, but overall kind of showed a willingness to go lower off of it, even though candle body closure was not exact. You're not always going to get that, especially with dollar. So just kind of sitting here and expecting that this SIBI sits here and holds as resistance. We had a little bit of displacement, and then today we can see that we came up, wicked through it, and then also closed back below it. So as long as price continues to go lower, I'm still aiming for this 103,880 level as my main draw on liquidity. We could very well test this SIBI again. It's a very small SIBI, but still a SIBI nonetheless. Other than that, that's really the main focus, is to see, do we hold the high that we made today, or and then deliver lower, or do we want to go and test that high? Obviously, with Friday being NFP, we could get some wild price action. But for the most part, I'm not too worried about today's high. My main focus is, as long as we stay below this SIBI, we should start to target the sell side. Whether Thursday takes out the high, Friday takes out the high, whatever the case may be, my main focus is on price drawing to this 103,880 sell side liquidity, which should, in theory, bring indices higher. I know that we reached all-time highs today, so keep that in the back of your mind. But for the most part, main thing obviously is we have the CIVI. You can use this up closure as an order block also. So if you're looking at it from an order block perspective, right, price could come all the way back up into this order block and then go lower, right? Keep that in mind. Also revisit the CIBI if it wants to as well. But for the most part, I would like to see the draw be 103,880. And that's really all I have on dollar, right? Same idea that we've had, lower prices, nothing's changed. We got a confirmation on Monday that we should take this sell side liquidity. Yeah, that's really it for me.
Okay. Short and sweet today. It's going to be the same for the indices as well. Now that we're trading back at all-time highs, there's really not a whole lot to look at in terms of the price data and where we can trade to. We ran back above buy side today on ES and on NASDAQ. And so considering that we had a large range day and tomorrow is the day before NFP, I'm expecting the likelihood of consolidation tomorrow. It's likely going to be a lower probability trading day just as a result of having NFP on Friday, so I want to be cautious of that. And then otherwise, just noting that we're trading at all-time highs, and when we're trading at all-time highs, we want to focus our attention on long setups. The market can continue to spool and run higher, and we're in the seasonal tendency of May to November offering that distribution of the yearly range. So everything is lining up between that and the dollar likely going lower for the indices to continue working into higher prices. And so I'm just looking at following price action intraday, understanding what the current high is, and how can we identify swing highs and imbalances above price intraday and use those as objectives to look for higher prices. You can start to use your standard deviations as well if you're using intraday targets, or even if you're projecting things off of the daily chart. But otherwise, not really a whole lot to look out for. I'll just watch for this Thursday, make an effort to create a new BISI in here on ES and NASDAQ. So if Thursday closes without touching into Tuesday's high, you will have a new imbalance in here, which could be referred to in Friday's trading. But other than that, just keeping the focus on higher prices, yeah, that's where the attention is. Just looking for how can we continue to take price higher. There's really not a whole lot to look for when you're trading at all-time highs. You're kind of forced into using intraday liquidity to get an understanding of where we can target and trade to next. So now that we've had this large expansion day, just watching for if we create a new imbalance here, and then if so, is that utilized as a point to support a price move higher. Carson, any other thoughts here? There's really not so much. No really even need to look at the monthly or
No, yeah,
weekly
I
today.
mean we're back at all time highs. Tomorrow is a day where if there's any day this entire week that you don't want to trade, it is tomorrow. Right? We had a large range day today, and it's a day before a large news event. We're going into all time highs. We've expected higher prices. So tomorrow, definitely just let it do its thing. You don't necessarily feel like you need to be a participant. And really, your best friend right now is going to be one, higher time frames, that weekly and that daily, and then at the same time, standard deviations, right? This is the candle that we saw today on the daily, at least, is something that forms a fair value gap. So I would not be expectant of something forming all the way down into, Tuesday's low, or Tuesday's high. So expect a fair value gap to form, but also expect a low range day tomorrow, and then even Friday, right? See what Friday has. If you're going to participate anytime throughout the rest of the week, it should be post NFP. It should be after that news release. And then from there, understand where we're trading, right? Is it going to be potentially a TGIF? Is it going to be a continuation of expansion, right? It could be both, right? If you get a TGIF, it could be a retracement back into the range. If it's going to be expansion following Thursday, then it can be continuing higher. So you have two areas and two total different biases and direction that you could potentially play. So just stay patient, let tomorrow play. I will not be a participant. I know Henry won't be a participant. So just let tomorrow play out. No need to try to force anything. If you missed a trade today, there will be a trade Friday, there will be a trade Thursday, or next Tuesday, whatever the case is. There's plenty of time to trade. There's no reason to try to force something right now, right? The biggest thing in trading is capital preservation, right? Learning how to lose is learning how to win, and you need to understand that. So if you're trying to force something tomorrow, even if it does run another 100 points, 200 points, right? Let it run without you. It's going to run without me. It's going to run without Henry. And most experienced traders, it'll run without, right? Not many participants are going to play in the market tomorrow, especially after a long range day. So I would just say preserve your capital. If you see something that you like on Friday, great. If not, there's always next week. It's the first week of the month, probably the lowest probability week of the month. So just preserve your capital, be safe. You know what to do. More importantly, you know what not to do. Right? We're in all-time highs, and we have room to go higher. So we'll see what happens. Other than that, I'm all good.
Okay, good stuff. I could run just really quickly through the weekly profile since we were so quick over the higher time frame charts. I'll just take a look at this briefly to give an explanation kind of the framework you're looking for with today's idea. So here's our all-time highs up here, which we ran up through today. And for the high probability trading opportunities, and this is what Carson and I are always talking about, you want to frame your week based on the economic calendar and weekly profiles to help you participate on the days that are most likely to be high probability expansion days. This week, though it is an NFP week, and we do allow kind of a Monday trading exception for NFP weeks because you're likely to have a larger range on the Monday since it's so early in the week ahead of that news. But regardless of that, typically not trading Mondays because it is the first day of the week and we don't have any information to help us understand what the weekly profile is ahead of that Monday. But Monday trades here, so no trades Monday. Tuesday, we could start looking for trading opportunities, but there's still no clear weekly profile yet, so I avoid it. Tuesday ended up being an inside day, never trading above the high of Monday and also never trading below Monday's low either. So just an inside day, low probability. But since we're looking at the likely weekly expansion as bullish, reaching up toward the buy side, which we've been talking about because dollar going lower, indices going higher after trading into a higher time frame point of interest, and we had a clear change in state of delivery here, forming a long-term low down here. We form another low to the right of it on Monday, and then you can see on Tuesday we draw down to the rejection block, and then as we start Wednesday's trading in the London session, we're already reaching through the buy side and up toward buy side liquidity up here after trading through Monday's high right here. So we already have a framework here that's showing us we're likely to have a classic expansion week with Monday being the low of the week, Tuesday making a higher low here, and then Wednesday and Thursday can be expansion days toward the draw on liquidity. So after we've had the reversal, it's the days following that are going to set up for expansion. So Wednesday becomes our first high probability expansion day. And when you have expansion days, then you just want to pair that with the daily profile. Excuse me. So here in London at 2 a.m., we draw lower, then have a change in state of delivery higher, and then you can note that we start using down closed candles to support a price move higher. Okay, so I'll even drop down to the 15-minute chart here. It's a little bit clearer to see. And what we have here is a London manipulation, New York continuation, which means New York session starting at 8:30 should have some opportunity to manipulate and then continue expanding higher toward the draw on liquidity without ever needing to go back below the London low. And so since it doesn't need to go back below the London low, we're just looking at down closed candles and imbalances as areas to support a price move higher toward buy side liquidity. And you'll note here that each time we trade back into down closed candles, we find support there as an order block. Here, here, here. Okay. That's a buying opportunity, that's a buying opportunity, that's a buying opportunity. And we can have the understanding that price should never trade back below the London low because of the daily profile. We already traded down below a swing low here and on the hourly chart into the new day opening gap and the bullish order block right here. So we traded in London into a higher time frame point of interest and then traded away from it, creating that significant low down here, and there's no reason to return back into it. And so then it makes it a whole lot easier to frame your buying opportunities, because anytime that we're manipulating, which we're expecting at key times in the New York session, so at 8:30, at 9:30, and at 10 a.m. when we have news, each of those times offers manipulation down into discount arrays that we can buy against to take price toward the draw. And if you frame your trades like this and then just use appropriate risk management and give yourself a wider stop, you don't have to worry about getting stopped out prematurely in here or trading inside of a period of consolidation, because you can have confidence that price is going to deliver toward that draw without needing to trade back below the London low. So if this is your opportunity to buy, if you're in at 7, I like to wait until at least 8:30, so this would be my first buying opportunity here. You can use the discount arrays below as your stop loss, or if you're trading with a much wider stop, you can just use London low, understanding that that should be protected. And you can still frame reasonable risk reward trades off of this too, because if you have an expectation for price to trade toward buy side, even if you're able to execute by limiting your trades to really high probability trades and just targeting a 1-1, you can be massively profitable with that. If you're a day trader and you're looking to hold for expansion days up until the close, or let's say you just hold until noon as the New York session ends, then you can still capture a very nice move. What do we get out of that? 2-1. So that's fantastic. Right? You're looking for these moves to deliver between 10 and noon. Go ahead, Carson.
I'll add something on that too. The daily profile today was actually the exact as the weekly profile, right? Monday gave the reversal. That leads you, if Monday gives a reversal, Wednesday starts the idea that it could give the expansion, right? So if Monday gives a reversal, you at least have to start looking for the expansion and slash continuation in the higher time frame direction on Wednesday. Same thing with the daily profile, right? London gave the reversal. If London gives a reversal, New York should give the continuation and expansion, right? It was literally fractally the exact same thing as the weekly profile and the daily profile today. So when you go into today's New York session and you see how price reacted in and around the New York Open, or excuse me, the Midnight Open, how price dipped below the Midnight Open, came back above it, displaced it, filled the displacement in and around the Midnight Open, and then from there, you're only looking for long opportunities, right? We've been bullish, we've been bearish on DXY, and so from there, there's plenty of opportunities. Even though on smaller time frames, it might have been a little bit harder to get a smaller time frame trade. It's the same exact thing. It's literally the profiles here, both on the daily and the weekly, are very keen, right? We've seen a lot of Thursday expansions, we've seen a lot of Friday expansions, but that doesn't necessarily mean that all the time that those 2 days are going to be classic expansion days, right? When Monday provides a reversal, you have to understand that Tuesday is going to solidify whether or not that Wednesday could potentially be an expansion, right? And we got that on Tuesday. Tuesday wasn't a great day to trade, but it gave you the weekly profile to potentially trade Wednesday, right? Same thing with London session today, right? We had midnight open, we dipped below it, and then displaced through higher of the midnight open. And so from there, you have to follow these steps of weekly profile, daily profile. Those are going to be your founding sentiment ideas of where and when you should be looking for trades. And really at that point, it can be very simple from there, right? You have a weekly profile that supports price going higher. You have a daily profile that supports price going higher. At that point, the entry is insignificant. It's insignificant. You can buy any down close candle. And then from that point, yes, we had 10 a.m. news and we had a little bit of shakeout. But if you're at least looking at a 15-minute or higher, you can understand that even those 15-minute SIBIs in and around that 10 a.m. news or 15-minute BISIs in and around that 10 a.m. news, where did the candle closure reside? Above those, right? Even if you got stopped out once, even if you got stopped out twice, whatever the case is with regards to you and your trading plan, candle body closure tells the story. We know this. Wicks do the damage. Candle body tells the story. This is a perfect example on how throughout the AM session, even though you had that 10 a.m. news, which did the damage, which wicked all the way through, look at the candle body closure, right? Either way, you're supporting an idea that price is going to go higher. So any down close candle, whether you go on lower time frames or not, you should have the idea. And even on the 10 a.m. news, right? The 10 a.m. news, you can act as manipulation. And then from there, that 10 a.m. news low becomes a solidified low that you could potentially hold as a stop loss point where you can signify that that low should hold, right? Even off the way it closed, even if you wait 15 minutes, right? 15 minutes, it spiked lower. And then from there, there's two BISIs that it closed back above. That should be a key indicator to you as a trader that we manipulated lower. We took out the 830 low. We took out the 930 low. But then from there, or not the 830 low, but at least the 930 low. And then from there, we closed back above both BISIs. And then from there, we can continue going higher. And you can capitalize on that as a trader. So today is a great example of both weekly profile and daily profile and how entries aren't necessarily in the long-term scheme of things. If you know the direction and you know where the market wants to draw to, you don't necessarily have to focus so much on the entries. You don't have to get a perfect entry. Widen the stop, lower the risk, and obviously, even if you lowered the risk today, the range in which the market moved, it still plays to your favor, right? So that's something that I want you to keep in the back of your mind. Don't always go in the market every single day with the idea that I got to risk this, I got to risk this. Let the market show you where you need to risk, and then from there, widen it, lowen it, and then from there, let it go, right? You know the draw. You can have standard deviations, right? For me, the biggest thing that I used was the standard deviation of today, right? The Judah swing lower in London was my standard deviation that I was watching, right? I played a counter trend trade. But from there, if I was long and I was trying to play longs, my counter trend or my trade would be sitting here using the deviation from the Judas swing lower. You can take the 1, you can take the 2, you can take the 2.5. Exactly. From there, you can take the 4, right? And if you use the 4, if Henry draws the 4 out right now, look where that lines up. Boom, right? Boom, easy, right? So you have confidence and conviction to hold, right? You have confidence and conviction to hold. Maybe you don't like holding. Maybe the -4 and the -4.5 is too far, right? The -2 and the -2.5 still plays boom, right? You're in and out of that trade within an hour, easy, 30 minutes easy to that 2.5. So keep that in the back of your mind as you're going through trades. Keep that 15-minute in your back pocket. Use the closure in and around it, right? If you get stuck on those 1-minute time frames, 2-minute time frames, 5-minute time frames, understand what the higher time frames trying to do, but more importantly, not even the higher time frames, understand what that weekly and daily profile is. That is 80% of my trading, that daily and weekly profile, because the entry is insignificant at that point. I know where the market wants to draw. The weekly showed me it. The daily showed me it, right? And then from there, just getting an entry is just finding a good point that can establish risk, right? If you waited until past 10 a.m., perfect. You have the 10 a.m. Within 15 minutes of the 10 a.m. news, you have a good clear low that you can put your stop to. And then from there, it's just buying any down close candle at that point. You don't even need a fair value gap. You don't need an order block. You don't need a breaker block. You don't need any of that. You can sit there and you can understand that you have a very clear low that is solidified that should be held. And then from there, if it's 50 points, lower your risk, right? Lower your risk. Put your stop still there. Risk what you still would, right? If you're trading minis, go to micros, right? Same thing. But you need to widen that, lower the risk, widen the stop, and allow it to trade, right? Because in these scenarios, you still can capture large range days. Other than that, don't trade tomorrow. That's all I got to say. Don't trade tomorrow. If there's anything that I can give you following today, don't trade tomorrow. Let it trade. If you're going to want to try to participate in anything for the rest of the week, let it be Friday after NFP.
Sounds good to me.
Other than that, I'm okay.
Okay, we'll close it up there then. Be safe, be responsible, and we'll talk to you tomorrow. Take care, everyone.
Peace.